What is most concerning to you right now about at least FedEx forward-looking forecast?
Yeah, it's really their outlook, because as much as they talked about the decline in global shipping and seeing the first drop in global trade since 2009, their international package volume was up year over year in the first quarter. And their big cut to guidance, they took their guidance down about 19% at the midpoint, has to reflect, a drop from there. So what they're seeing ahead is most concerning to us, because it means a drop in volume. And what FedEx has been doing, both on the express side and the ground side, has been investing for growth. And so as they invest for growth, if the growth isn't there, that's just going to lead to a margin squeeze in the near to medium term.
And of course, now FedEx is looking at Amazon in a very different way than it did before. Before it was a client or a partner, and now effectively it's a competitor. I mean, how much does that change the landscape for FedEx?
I don't think it changes it too much, because even over the past couple of years, FedEx in their commentary to investors has been de-emphasizing Amazon and pointing to the fact that most of its business, 99% of it, did not come from Amazon to begin with. Certainly the decision to walk away from Amazon, first on the express side and then on the ground side this summer, is creating near-term challenges. There's just a gap in volume that needs to be made up and can't be made up by one single customer quickly. But outside of that, FedEx continues to grow their package volume, and I think they'll continue to grow it even as Amazon does more themselves and as Amazon grows its own package volume.
And when it pertains to the trade war and what's going on with FedEx business in China, what should we be understanding about how that is interrupting or squeezing FedEx's business? And if there's any relief in sight there, anything that FedEx can do to sort of mitigate some of that pressure?
It's really out of FedEx's hands in terms of the trade tensions and what's going on with the tariff issues. They've said their piece and certainly encouraged global and open trade. But as the Chinese economy gets hit, one of the things that Fred talked about on the call yesterday is it has a negative impact on Europe, because European exports, a lot of them have been going to China. So as China is slowing, you have the drop in Germany manufacturing, and you've got the general decline in German exports. So FedEx on the international side, what it can do is really integrate its TNT operations over in Europe, which it hopes to be finished with by the end of this fiscal year. That is challenging, so it's not a foregone conclusion that that's going to happen. It's going to happen successfully to the degree that FedEx wants it to, but that is the self-help that FedEx has, is to right-size its international network and to get that to be a more efficient operation.
And just very quickly before we let you go here, David, we often look at a company like FedEx or UPS as an economic bellwether. Should we be worried after these results, if that's the case?
On a global macro standpoint, yes. I think FedEx is certainly sounding the alarm that global trade tensions have had an impact on global trade growth in the worldwide economy. Although from a U.S. economic standpoint, the consumer remains very strong. I think you're going to have a good holiday season. FedEx is expecting a good peak season. So there remains this strong U.S. economy, healthy U.S. economy dynamic with the backdrop of slowing economic growth globally.